The timeline of the dollar's movements explained from March up until now. So guys, in this video, it's a bit more educational, taking a look and explaining why the dollar has moved the way in which it has from March up until now. So let's go through. I'm going to start off here, okay? Back in March, we had this huge scramble for dollars, okay? Now, why did we see that? All of this pumping from this 95 area? Well, it was when the coronavirus started to really pick up pace, obviously globally through Europe. And then we started seeing all these lockdowns from governments. You know, economies were just completely shutting down. So people were like, we need to seek safety. Okay, if we look at the currency market, we have to seek safety. Where can we seek safety? Obviously, you've got your traditional JPYs, your yen and Swiss franc. But then you've got the world's most liquid currency in the world, the number one currency in the world's largest economy, the reserve currency of the world, the dollar, the greenback. So we start having this massive flood into dollars. People just piling back in the dollars movements. Any dips that we see, any pullbacks, we buy. Any pullbacks we see, we buy. And we just kept seeing that aggressively to the upside, as you can see from this period of the 10th of March up until sort of the 20th of March. Now, why did here we start losing ground for the dollar? As I've got marked up, dollar loses ground on huge FOMC stimulus measures. So obviously the FOMC are now realizing, you know, the global economy is suffering. Okay, the US economy, most importantly for them, is suffering. We need to take action right now. So they started cutting their slashing rates, you know, to near zero, introducing these huge stimulus programs and all these schemes for businesses and, you know, to lend out so people can still borrow. So essentially they're just flooding the market, absolutely flooding. Print. Loads of dollars going into play there into the market. So of course, when you've got a lot of something, you're diluting the currency, the value is going to come down. Okay, economics 101. So dollar loses ground, as you can see here. Okay, throughout March into April, well, late March, and then do you remember from sort of April up until the latter stages of May, markets were just so choppy. You know, just ranging and choppy. Awful conditions. Okay, awful conditions. And this was a period where I had to adjust my trading and just go for more sort of intraday moves, you know, sort of smaller bursts of momentum rather than committing to swings. So, okay, we had this consolidation period. Markets waiting for the next catalyst, right? We've got all this lockdown and so on and so forth going on. Now you can see the back end of March here, as I've got marked up, a wave of risk appetite comes into play. When I say risk appetite, what do I mean by that? I mean markets are hungry for risk. They don't care about the safe haven. Dump dollar, dump yen, dump Swiss franc. Let's go for the more riskier currencies where we're trying to get more yield. You know, Australian dollar, NZD, New Zealand dollar, CAD, GBP is a riskier currency. Obviously then Euro gaining some ground on this weakness in dollar, dumping dollar again with a risk appetite. We were seeing that, guys, because you know, we're seeing a substantial drop of cases of COVID-19 throughout Europe. Globally, cases were calming down as well. We're seeing an easing, a massive easing across the board with lockdown restrictions, economy gradually getting back to it, and data was starting to rebound, which was good. Okay, so again, risk appetite, and remember we had like 3 solid weeks recently of all of that pumping of the riskier currencies, okay, and riskier assets, stocks. Remember that big stock run as well? Right, now most recently we're seeing a dollar stage a rebound. Okay, it's attempting to stage a rebound. I believe we will see one. We've got strong cases for now. One of the key reasons for that is, look, okay, we've come back pretty much in line, almost paired back back towards that pre-March bull run level. As you can see, all this pumping, come back to that, pretty much so. There's fears, I did a blog on it earlier in the week, okay? There's fears of a second wave of a coronavirus hitting the US, okay? A second wave, which would be crippling to the progress is made so far. Cases are rising in parts of the US. Remember, we had the WHO, the World Health Organization, their warning earlier this week about, yes, it's calmed down through Europe, cases have dropped, but globally we're still seeing a rising in cases. Okay, we're seeing a drastic rise in cases. Brazil, US. Another reason to start backing the dollar again. And then one last thing, the FOMC assurances with QE action may start to have a positive impact on the dollar. When the FOMC first announced QE, you know, back for the 2008-2009 crisis, launching this massive QE program, markets, after the initial wave of volatility to the downside, because you're flooding market dollars, markets started buying the dollar heavily. We saw this huge dollar bull run, okay, because people are assured that, look, this central bank's willing to do whatever it takes to keep the economy strong and buoyant. Hence why we back the dollar again, because of that. Safety, 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 safety. So markets could start scrambling for the most liquid currency again, for safety, as I noted here. So this is just a timeline of the dollar's movements, and you can see just on a weekly how we're trying to shape up this potential, reversal candlestick here, whether that end up being a hammer, reversal doji, morning star, whatever the case may be, but it's certainly shaping up to start pushing up to the upside again. We're going to see how this weekly closes. It's going to be key, but really looking for a nice dollar rebound. And it only makes sense. Look, aside of everything fundamentally I've noted, guys, you've got to think, after all this selling, technical correction makes sense as well. Okay, so we've got a lot of confluences there to see this dollar reverse. Guys, just to round off, you see all of this in here? I put it into a course, okay? I put it into a course. You can see the value that we demonstrate, the knowledge that we possess. And this is not something that's come easy, but it's come with experience and years in this market. And I've put it into a course, which to make it easy for you to understand, to make it your bread and butter, almost like you read the charts technically. Now, transform yourself, become an all-rounded trader, and check out the courses, freaknetwork.io courses. Check out our fundamental course. You will not be disappointed. A lot of knowledge and energy in there. Other than that, stay lit, baby. Let's get it.